All right, hello everyone, and welcome to Technology Tuesday. We're so pleased that you took time this afternoon or this morning to join us to learn about sales tax automation with Avalara. My name is Jennifer Darachuk. I'm the marketing manager here at Out of the Box Technology, and I'll be serving as your moderator today, fielding any issues, hopefully none, but that might arise as we go through today's presentation, and also working alongside the lovely ladies at Avalara to field and answer any questions that you might have. As a little introduction to Out of the Box Technology, if you haven't joined us for Tech Tuesday, or maybe it's been a little while, we are anything and everything QuickBooks. We have a whole team of solution providers and pro advisors on our team here that really know anything and everything about QuickBooks, the whole suite of products. We do data services, business services, ongoing bookkeeping, and a variety of training, integration, support services as well. So that's just a little snapshot of us here at Out of the Box. But today we are really focusing on sales tax. And with that, I would like to welcome our partners and friends over at Avalara. So with that, I have Tara on the line, who's going to be running our presentation, and then also Jamie Dunn, who is supporting her and here to kind of keep everyone engaged, answer questions that we have. So use that chat as Tara goes through and let us know what questions you have, what topics you want to hear, and I'm really excited about this presentation. So Tara, let me make sure I select the right button for you to share your screen. Did you get a little invite there?
Not yet.
Okay.
I have it, so but that's because I'm duplicating Tara.
There's two.
Did you get it? You good now? Let me try.
Why don't I go? I'll exit and come back, so Tara will get it.
It's okay. I can just
Okay.
pick the other one. Let's see. Did that come through?
No.
Mine.
One more time.
Oh, now I got it.
Okay, great. Third, fourth time's a charm.
Right. Okay. So, do you see my screen now?
We do. Beautiful. Thank you, Tara. And now I will officially hand it over to you and let you dive right in.
Okay, perfect. Thank you, Jennifer. Let me just, so here we go. So thank you, Jennifer, for the quick introduction. So I'm Tara McLeod, Tara from Avalara as known, with Avalara, and I also have Jamie Dunn, who oversees our partnership programs here. So she's a SAM, we call a strategic partner manager, who oversees the partnerships. So we work in tandem together with companies and partners that are looking for ways to automate, streamline their sales tax compliance. So for today, what we're going to do is we're going to talk about the guide of sales tax automation and just really dive into the who, the what, the whys of what Avalara does. So just to give a little bit of background about myself, who I am, I've been with Avalara just over 8 years now, working with companies from startup companies to Fortune 500 companies to go in with their company to determine what challenges, what concerns they're facing when it comes to sales tax for their business, and just basically consult to see what challenges they're facing and how Avalara can accommodate those challenges that they're facing with their compliance model. Last year, just to kind of give a little bit about my background, it was a great year for me. I was the top global winner within the company. So not the US alone, but the global. We have companies or we have locations all over the world at a global scale. So pretty exciting to win that honors last year. And then just a little bit
of beautiful AMG Mercedes for 3 whole years. I have to brag about her, which is why we have Tara on this webinar with you guys today, because she's one of the smartest people at our company. And while I say that, I also want to say that this is supposed to be interactive. So as we go on, please write in the chat. Rebecca, jump in. Jennifer, jump in if we have questions. We want to make this interactive. So Tara, we're lucky to have you today, Tara. Thank you.
Thank you, Jamie. Yes, and absolutely, we don't want to do a death by PowerPoint presentation. I know sales tax is not a great topic. Everybody doesn't really want to talk about it, but it has to be done. So we try to make it as engaging and as fun, as interesting as possible. So during this presentation, please type in if you have any questions. We'll make it as fun as possible and engaging as we can here with the topics. So again, on the agenda, what we're going to talk about is the current state of managing sales tax compliance, and we'll go into the 5 whys: the what, the where, the why, the how, the reasons why companies automate their sales tax compliance. And then again, if you have any questions, please pipe in, ask those questions while we go along. So we're just going to rewind back to 2004 when Avalara first started. So very similar to like how Microsoft started. It was in a garage with Bill Gates. Scott McFarlane, who is our CEO, he started this business on a small island just off in Washington State, Bainbridge Island, where him and 2 other buddies got together and came up with this idea of how to create a software for companies that are selling products, exempting products, remitting the returns in the States. So we've grown quite significantly from 2004. When I started, I think I was employee number 412. Jamie, you were probably around that too, in the hundreds. Now we have over 5,000 employees. Here is showing 44,400, but we've increased since then. Not only are we just in the US, North America, we've expanded globally. So we have businesses, locations in Brazil, Europe, India. So as companies are growing and changing their compliance, if they go across state lines, international lines, we do have a solution that fits all. So we're just going to start off with a fun little guessing game. Here you can see that we have 4 different powder juice mixers. And as you can see, one of them is exempt. Now, take a look carefully, because when I was taking a look at this and I was playing this guessing game, my thought was Crystal Light. And I was thinking this because if you take a look at it, you can see that there's 6 individual packages, and then the others are just like the powder where you scoop it. Now, I'm just going to scroll over here and tell you that the one that is exempt is Tang. And it's not because it's orange like Avalara, that's our color, but the reason why is because there's a small percentage of dairy in the Tang. So this is all handled. You're probably wondering, well, why? Why is Tang taxable and the others aren't? This is handled by taxabilities to the products and services that are being sold. So here for Tang, because there's a small amount of dairy, this now deems this product the taxability rules on how it's handled for sales tax. So it had nothing to do with the Crystal Light having those individual packages. It all had with the content, what's in that product that's being sold. It's kind of fun. So with the current state of sales tax today, how are companies currently managing this? What changes are happening out there? I'm not sure where everybody is located, but for myself, yes, I'm in Arizona, and I know you probably all just heard what's happened here. But with the election that had just come, there was a lot of changes to sales tax. You could see on all those ballots, there was different changes with fire, different tax rates, and different tax laws that are coming into effect. So again, the current state of managing sales tax is always changing from day to day, and we're going to get into the weeds of showing you of how those current changes are currently managed here. So here on this page, I know it's got a lot of numbers and a lot of words, but the one takeaway I want everyone to get a grip on and understand is Nexus. So if there's one takeaway today, it's understanding Nexus. So that is what we're going to learn about today. Here you can see the word COVID. We hate seeing that C word, but it's still around. When 2020 happened and COVID really hit, it changed the landscape for a lot of businesses because they had to think outside the box in different ways to go to market. So things were changing where companies were closed. How are they going to keep selling? Well, a lot of times companies started selling online. They get an e-commerce site. They would start selling, say, on marketplaces where they would sell their products on Amazon, Etsy, eBay. They would do drop shipping, so they would be drop shipping. A lot of times with companies that are dealing with exempt sales, so resale certificates, that's a challenge too, because companies were closed where employees couldn't get into the location to grab that information. So it just got really complicated fast. And then when companies were starting to make those changes, they were trying to figure out, well, where do I have Nexus? Am I on the hook for sales tax? Should I be charging sales tax in these states? What are the rates? So it got very complicated for these companies to understand where they have that obligation to collect and remit sales tax. So we see it day to day where we talk to companies and they had it all figured out where they were just selling their products under one invoicing system. COVID had come up. They started now selling on an e-commerce platform, and they didn't know that they needed to be registered in those states. So there was a lot of backpedaling that had to be done with determining, okay, they had Nexus in that state. Now, do they need to remit those back filings for that state? So it's a lot complicated for companies. So managing the sales tax then and now has been a little different, and it keeps changing. So just know Nexus, that's the most important thing is, and what that means is where you have the obligation to collect and remit the sales tax for your company. So just to kind of show you some numbers here about the US, so just think of this as North America alone. The numbers are crazy. Like you take a look and see, okay, 152 million mailing addresses. There's over 12,000 jurisdictional rules. So that's meaning how products and services are handled during these jurisdictional rules. Exemptions, so companies that are not charging sales tax having to show why they're not charging sales tax. There's different rules for exemptions in resale certificates. So it makes it a lot complicated for companies that are doing this manually if they're in one state versus all states or just a handful of states. And depending on what those states are, every state's different on what their rules are.
Hey, Tara.
So, yes.
I'm gonna throw something in here that is kind of a wacky thought. So if all of you folks thought about those numbers that Tara just listed off, and you think about automating payroll, and you think that's a no-brainer, you would never not automate payroll. Well, from the numbers Tara just showed you, and every single state in this country acting like its own country, I would say that automating sales tax is literally 1,000 times harder at minimum than automating payroll. So it's become a really big deal. Those numbers are a really big deal. And Tara will talk more about how the states are going after small business owners and accounting folks on this. But it's the real deal these days.
Yeah, very true, Jamie. And I'll get into the visual of how Avalara looks like, we like to call it the pixie dust on how Avalara all comes together and automates this, because it is very similar to outsourcing payroll. You're outsourcing your sales tax. So we'll get into that here deeper in the demonstration. So showing you here on this slide, managing your sales tax, there's really 5 points that needs to be done. So the first step, really, we talked about Nexus, understanding where your business must collect and remit that sales tax. So where you need to be registered. Registration, is it for, do you have locations there? Do you have people there? Do you have licenses? Do you deal with like liquor licenses? Do you have, in the medical industry, there's licenses. So there's a lot of registrations that need to happen. So you just need to make sure that you have that right license or that registration in that state. And then with calculating, what is the calculation rate that you're using? How are you getting this? So a lot of times when we've talked to companies, they're doing this manually and they're using a zip code. So they're basing the rate off of a zip code. Well, zip means zip when it comes to sales tax. They really have no correspondence in other ways to go about it. Just to give you an example, Colorado, they can have 9 different tax rates in one zip code. So it's very error prone when companies are doing this manually and basing their tax rate off of a zip code. So you can be overcharging, undercharging your customer, but really if you're ever involved into an audit, that discrepancy can be spread very big. So just to make sure that you're making sure that you're correcting the correct rate, and then what you're selling. So you could have like a high dollar volume product, and then if you're charging the incorrect rate, I mean, just take a look at what that could cost you. And then if you're not charging sales tax, the exemptions, that's what you're having to do. You're having to show why you're not charging sales tax. So Avalara, we manage the exemption certificates for those sales. So we basically store those certificates, validate certificates, request certificates. So making sure that, again, that liability is lying on your customer and not you if you were ever involved into an audit. And then at the end of that compliance process, you're having to remit that sales tax, right? So depending on where you're registered, what that frequency is, Avalara, we do that on your behalf for you. So we're the ones that cut the checks, fills out the reports, mails them to the proper tax jurisdictions. So we're going to talk a little bit more about economic nexus. So think Nexus again, I know you're probably already sick of me hearing the word nexus, but I really want to drill it into everybody's head because it is the most important piece for companies and sales tax. So nexus could be 2 pieces. So physical nexus and economic nexus. Economic nexus is, and I'll just give you a high level overview because some of you folks on the call may already know about this, some may not know. So I won't waste too much time, but I just want to give you a high level overview. As of June of 2018, South Dakota and Wayfair passed a ruling where it basically said, if you're selling into my state, I want to collect the revenue in that state. So since then, all 45 states have now adopted an economic nexus threshold where it could be number of transactions in that state, or it could be a dollar threshold in that state. And this map here is just showing you the different thresholds in there. So this kind of looks like a jigsaw puzzle. There's no correspondence on what these colors and how they are, but it's just very confusing because every color represents a different economic nexus threshold and when it went into effect. So this started back in June of 2018, and as we are where we are today, it's showing pretty much every state has an economic nexus threshold in place. So again, this makes it challenging for companies if you're selling on an e-commerce site, so you don't know where your product is being shipped to. If you're doing drop shipping, who's on the hook for the exemption certificate and for the registration in that state? If you're selling on a marketplace, if you're selling through Amazon FBA or Amazon Plain, if you're selling on eBay, Etsy, all those different platforms have marketplace facilitator rules in those states. So just know what the economic nexus thresholds as well as physical nexus thresholds, it all comes into play at the end of the day, nexus. So you really need to determine on where your company has nexus. And as you can all see, you've got your attention now. Avalara, we do offer a sales tax risk assessment, so it's a free tool that you can utilize to determine if your company has hit an economic nexus threshold. So we'll talk a little bit more about here at the end about the promotions that we have going and a little bit more about this free assessment and what all it contains. So we're going to play another little guessing game here, and what this is showing you is how many tax rates were updated last year in 2021. So we have 4 numbers here. quite small to quite large. So I'll just give you a couple seconds here to guess on what you think those are, since I can't talk to you all. But if you did guess 6,014, you were right. That's how many sales tax updates were made in 2021. So if you take a little bit deeper of a look at it, that's over 100 updates per month. So in the US alone. So not only if you're in the US, but if you're selling international in Canada, Mexico, wherever, there's rates that are changing there. So just know that last year alone, there was over 6,000 updates to the sales tax. So we're going to get into the 5 W's of sales tax automation, basically the who, the what, the where, the what, the where, and the why. And what I'm going to do is just kind of dive in here and start off with what. So what is sales tax automation? Some of you may be familiar with Avalara. Some of this all may be new to you. So Avalara, we're basically the leader of sales tax compliance out there in the space. So Avalara, we're a software company. So we have a solution that integrates into your invoicing platform. So if you're invoicing through, say, QuickBooks, if you're invoicing through Fishbowl, if you have a homegrown system where we have an API that integrates. We have integrations into over 1,600 different ERP, e-commerce, point of sale platforms where we automate this. So again, this is like the orange pixie dust, the magic that happens where we have that pre-built integration into your invoicing platform. So whenever you do a invoice, a quote, an order, Avalara is going to get that tax calculation for you. Make sure that you're never overcharging, undercharging your customers. But we give you a accuracy guarantee for our rates. So this is just a guarantee for our clients that are using Avalara. So company auditors know who Avalara is. So they know there's not a lot of room for error when companies are automating their sales tax compliance. They'll go across the street where the whole low-hanging fruit is, where companies are doing this manually. So Avatax, what we're doing when we do that calculation is we're determining, where does your company have Nexus? What are the rates according to what you're selling? Are you selling products? Are you selling services? Do you handle exemptions? Are those products and services not taxable because they're resale? How much has to be remitted back to that state? That's all done in real time through the Avatax calculation through your invoicing platform. So who needs automation?
Tara, sorry, real quick. We got a couple questions and I thought it would be fun to answer them right now. Sorry, folks, we're having some troubles with chat, so we're having to send questions to each other. So Tara, the first question, which is a fabulous question and just came across my desk this week actually, is there a time of year that is better or worse to start working on Avalara? Should I hurry up to get set up before year end? And I know what I would say, but I'm sure Tara has something much more passionate about this question.
Yeah, and I think we're going to get into that here in the next couple of slides here, but you know what, sooner the later to have that done, because it's not if, it's when companies are going to be audited. The changes are constantly happening. So you need to put something in place sooner than later. So with timing, it really depends on your company's bandwidth. Like when do you want to have a solution in place? This could be where you have new products that are coming online. It could be what we're seeing now is a lot of companies want to be live for the new calendar year. So they want to have a solution in place for 2020 to 2023 where they're starting the year off right, on the right foot. Absolutely.
Plus there's a little bit, because we are a large software company, there is a time frame to get set up, right? So you would get on the phone with Tara and have a conversation about your sales tax compliance profile. You would figure out what nuts and bolts you wanted to attach to QuickBooks or whatever accounting application you're using or e-commerce shopping cart. And then you'd work with our Go Live team to get started. And depending on the variety of products you purchase from us, there's a variety, or there's a time zone to get started. So for example, This week I had a client that said, you know, hey, we're too busy right now, but we want to make sure this happens in January. And I was like, whoa, hold on. Depending on what you need, then we should make sure this is in the books in December so that you're live in January. And again, Tara can tell you more details about that, or we can take it offline. But there's really no time like the present. Everybody wants to ignore sales tax, and it's something you definitely don't want to ignore. There's one more question here, Tara, and I'm going to interrupt you here. If the client charges sales tax, it is not necessary for them to file sales tax only after they hit one of these thresholds. Okay, so yeah, so if they're filing, do they have to file only if they're at a threshold, Tara?
So first thing they would have to do is get registered in that state. So you don't want to charge sales tax unless you are registered and you have a connection to that state. If you're collecting sales tax and you're not registered in that state and not remitting it, not a good situation to be in. Basically, you're taking money and it's like a felony, right? You're collecting money from the state, but you're not remitting it back. Once you know that you have Nexus in a state, so you hit a threshold or you have a location, a physical connection to that state, meaning you have Nexus, the first step is you need to get registered. Then you would start collecting and remitting sales tax. Does that answer your question, Jamie?
I think that must, because I haven't received anything else. So let's just carry on, and I'll probably interrupt you with more questions in a little bit.
Okay, perfect. And just to add to the question previous in regards to timing, so like what is the timing to implement a solution? So just to give you a visual of how this would look. So companies that are saying, all right, January 1st, I want to be live on an automated solution. There is time from now to then to go through an implementation process, because yes, there is work that needs to be done for companies to be live on Avalara. So I would like to give yourself, say, anywhere between 2 weeks to 4 weeks to go through an implementation process to get you live in order for a go live target date. So we do work towards that go live target date for companies. So typically they'll say, all right, the beginning of the month, we want to be live, the beginning of the year, the beginning of a quarter, but we work towards that target go live date. Okay. So why do companies outsource and automate sales tax? Well, the one thing, why wouldn't you, is what I always come back with. Manual process is more expensive than an automation process. So here it's just giving you some numbers, high level overview on what the average cost of what companies do. So there's a difference between cost and price. And this was a survey that was done last year in 2021. So you may not think that, oh, okay, yes, our company has sales tax, but you don't really see what it's costing your company. But at the end of the day, what you're paying accounting professionals spending on this, the average rate of what this is, if you're involved into an audit, what that is going to cost you. So it does add up, and this is a manual process. I mean, this has to be done. As you took a look at the beginning of the presentations, all the different changes, all the different rules in the jurisdictions, this is all done manually, and it's basically impossible to do this and stay on top of. So if you have an accounting professional that's doing this for 10 clients, I don't even think there's enough hours in the day to do this manually. So companies outsource it where it's all done in real time through automation. And then this is just kind of giving you some more numbers showing you of what this does to companies. So basically, when companies outsource their sales tax, they're letting their people focus on their business. Sales tax is not a revenue generating activity, but it has to be done. So this lets people from your company focus on what they need to do to grow the business, while Avalara is outsourcing that, giving you peace of mind, better ability to the scale, reducing the cost, and then the increased awareness of the tax updates. So this is all done in real time. So there's no changes or disruption to your business. The way you invoice is the exact same. It's all behind the scenes. Oh, and this is a little tip that we have. Do what you do best and outsource the rest. So with automation and why companies are continuing to automate, times are changing. So a lot of times when we have companies that we talk to, they're, believe it or not, but they're still on the DOS system. So there's that mentality of not wanting to change. So they're stuck kind of in that era. As you can see how we're changing, and take a look at like our cell phones. Take a look at how you go to McDonald's now and order your food. Everything is streamlined. So this is even for companies that are automating their sales tax, where you want to make sure that everything is in line. So real time, any changes, the efficiency, customer satisfaction. So again, you're never overcharging, undercharging your customers, but the biggest protection and why companies automate is audit protection. So they just want to make sure that they have peace of mind, their company is growing, and then they're focusing their people on growing their business. We're going to have another little fun guessing game. This was actually quite interesting when I took a look at this. And as you can see, we have 4 states here, and one which has a 26-page of tax rules for a campground, which I can't even imagine. So taking a look at this, I'll just give you a couple seconds to guess on which campground you think would have the 26 pages of tax rules. Now, if you guessed Wisconsin, you were right. I was thinking more of California, because the way California and the cost of California, taxes in California is just absurd. But Wisconsin is the one that has all these different associated tax rates to electric hookups, to sewage disposal, to self-service laundry. I don't know, but I think it would probably be more affordable to stay at like a 5-star hotel than actually go camping in like Wisconsin. So I'd actually like to see what their campgrounds look like, considering how much taxes people are paying to stay there. So when, Jamie, this is kind of going back to your previous question here on when should companies pursue automation. Well, really, it's not if, it's not if, it's when. So we don't want companies to wait too long. And from day to day, we see it where companies come to us after the fact. So we'll talk to companies, and we've been talking to them for years, but they just don't see the ROI on, well, you know what, we're okay, everything's good, it's not great, but it's good, we feel like we have it under control on that, and then they get hit with a state coming to them with a notice. So we don't want that to happen. We want to be proactive instead of reactive with getting companies a solution in place before it's too late. So we want to get the horse in front of the cart when it comes to automation and making sure that it's streamlined so companies can get this underway. So why pursue automation now? Because changes are constantly happening. As I mentioned before, we just had the election. There's going to be more changes coming there. We're just getting out of COVID. Auditors have increased their hiring for California as well as Idaho and Utah. They're starting to go after small businesses because they see errors in the way companies are set up. So they'll take a look and see, okay, well, this company is now selling products in this state. They're not registered. They should be registered. It's happening day in, day out. So you just need to make sure that you have your compliance, your I's are dotted, your T's are crossed, and you have Nexus and are registered in those states that you do have Nexus. We had one company, just to tell you a quick story. We had one company that was in Oregon. The company was Mattress World, and there was an auditor that was actually sitting at a Starbucks by the bridge that goes from Oregon into Vancouver, Washington, and saw this Mattress World truck that went over, and then called the Mattress World over in Washington and basically said, I want to buy a mattress this is my address, gave them a Washington address, and went through the whole process. Well, because they were not registered in Washington when they should have been, that audit ended up closing their business where it cost them millions of dollars. So true story, auditor was a client of Avalara's after the fact, but they ended up closing their doors because it just cost them too much and they just couldn't afford it. So how to choose a good, right solution for sales tax automation? I mean, there's good, better, and best, and we're going to talk about the good and the great. So good solution, what does that offer? Well, I mean, it's going to give you accurate tax calculations, so it probably won't drill it down to the taxability of products and services. So if you're in the industry where you're software as a service, there's a lot of limitations and a lot of complexities to products and services in that SaaS industry, where it could be downloaded software, it could be canned software, it could be on-prem. So all different softwares are handled differently, as well as distributions, companies that are in the distribution manufacturing market. Dynamic reporting capabilities, so they can report, but they won't remit the filings and returns. So if you have filings and returns, say on an annual basis, that can be done. A lot of times now states are going to monthly as well as quarterly filings and returns. So you just want to make sure that you have the solutions at the right fit for your company. So a great solution, what that's going to do is it's going to manage all the taxability rules to the products and services that you're selling. So if there's any changes, say to a tax rate, a tax rule, a boundary, you're always going to get that. If you're growing your business, so say that you're now going to launch a new e-commerce site, or you're going to acquire businesses, or you're going to move from, say, a QuickBooks platform to, say, a NetSuite platform. You want a solution that's going to grow with your company. So a great solution is more of a fit. So as you grow, we're going to grow with you. And as well as international. So a lot of times what we're seeing now is companies starting to sell their products internationally. So they'll go over to the UK, they'll go over to the EU. Again, that's now a different conversation that we're going to have when it comes to sales tax, but just know that Avalara, we're a global company. So as you grow, and if you're having to go into these markets, we can do the VAT filing, we can do the VAT registrations, all that's handled through our global service. So where to start? Again, we're going to rewind this back to Nexus. So this is the first important piece from this discussion that we're going to have today, is determining if and where you have Nexus. So there's no gaps to your company's compliance. So basically it's letting you know the lay of the land for your company on where you're needing to register and collect sales tax. So right now, Avalara, we do have a couple of promotions going on right now for Nexus studies. So we can do a sales tax risk assessment for your company at no charge. So this is a good value prop for companies that are taking a look to put a solution in place to automate. So if this is something that you're interested, I can pass along this information for you. But what we're going to do is we have a professional services team here that will do a full sales tax risk assessment to determine if and where you have Nexus. We send you that report. It's like an 80-page document, and then we set up a 1-hour call with you to review this. So we answer any questions, we give you the information, we even give you recommendations on a path moving forward. So it's just a good value right now that we're offering. The cost of the Nexus study, it's a $4,500 value, but again, we're doing this for free for our partners here at Avalara. Jamie, is there any questions at this point while I just transition over here to the SST discussion? No? Okay. Then I'm going to get started as I clear my pathway here. So I know there's a lot that we're covering today, but again, what's the one thing that is the takeaway? It's Nexus. The next part that I want to talk to you about is the SST program. So I just told you about the free Nexus study that Avalara will do for you. I can send you some follow-up information about that. But in tandem to free, I know everybody likes free, I did want to talk to you about the SST program. So a lot of you probably aren't familiar with this, so I'm just going to go over this with you to give you some high-level overview. So the SST program, oops, I'm going to just scroll back, sorry. The SST program it's the Sales Tax Initiative Program, where Avalara, we're a certified provider for this program. What is it? Well, it's a group of 24 states, and here you can see those 24 states are the white states that are part of this program. So what this means to you is that if you use Avalara to outsource your sales tax and you qualify to be a volunteer status for the SST program in that state, so you have to meet requirements where it could be, I believe, $50,000 of revenue in that state, less than 50,000 property in that state, and there's a couple other criteria for that, and I can send this follow-up information over to you as well. You can probably find it on our website as well. But the good thing about this program is that if you do qualify for the SST program as Avalara, we're a certified provider, not only will we register you in those states, if or any of the states, you do a couple of the states, you can do all of the states. We'll also do the calculations, so the sales tax calculations, the invoicing. We'll file and remit the returns for you in those states for no charge. So this is because Avalara, again, we're a certified provider for the states, so we work with the 24 states. So companies that take part of this program using Avalara, those 24 states are exempt where Avalara will do this for no charge. I know it sounds too good to be true, but it is. So here, I'm just going to show you, this is basically like a high-level overview, a visual of what this looks like. So think of it as like a whiteboard. Avalara, we're a cloud-based software. So here you can see Avalara is in the cloud. All our content is in the cloud. We're software as a service. The first thing that needs to be done is determine on where you have Nexus, right? So where you're collecting, where you're remitting sales tax, what you should be calculating. Then what we do is we manage exemption certificates. So here for your ERP system or your invoicing platforms, let's use QuickBooks. Avalara has that tax information where when you do an order, an invoice, a quote in your system, we push it to Avalara and then pushes it back to your system to determine that calculation. So that round trip calculation is about 0.4 of a second, where we're taking a look at that customer, we're taking a look at that ship to, we're validating that address, we're taking a look at each line item and calculating that. So again, it's 0.4 of a second to make that call. When we go through that tax determination, we're also going to call out to exemption management. So we're going to take a look at your customer information, and we're going to check to see if there's a valid exemption certificate on file for that customer in that state. So this makes sure that all your certificates are up to date and valid for invoices and for customers that you're not charging sales tax. Because at the end of the day, if you're not charging sales tax, you're having to show why. And that's where exemption certificate management comes into play. So we like to see, it's like an insurance policy. So we treat these paper as like currency, it's money. So we're making sure that all the certificates are up to date and valid. And a lot of times when we go through this process with companies, we go through an uploading process for companies, and it's actually comical where we see these certificates where you'll have certificates that are not signed, they've expired. one company had a gun license thinking like that was a valid exemption certificate when clearly it was not. So you just want to make sure that your certificates are up to date and valid. And then once we do that tax determination, do the calculations, manage the exemption certificate, we'll file and remit the returns for you. So depending on what state you're registered in, what your filing frequency is, are you doing paper filings? Are you doing electronic filings? We take those filings over for you. So we're the ones that cut the checks, fills out the reports, mails them to the proper taxing jurisdictions. And then a lot of states have prepayments. So if you're set up with a prepayment, we'll even pay that, early filing discounts is what I meant. If you're set up with an early filing discount, we'll even do that early filing discount and give that discount back to you. We actually had a company that was in Texas, and they were set up for early filing discounts, and they did millions and millions of dollars. The early filing discount refund that they got back from Avalara ended up costing them the cost of the subscription to use Avalara. So just kind of keep that in mind, that we're trying to save companies money by finding loopholes in ways to pass those funds back to our clients. And then here we have our one last fun little guessing game here. We always save the best for last. I don't know if you all, but I have a sweet tooth here. So when I see this, it kind of gets my glands going here. So here, what ingredient turns a taxable trade into a non-taxable food item in some states? So here you got flour, you got chocolate, you got sugar, and you got nuts. So, and the reason why here, this is kind of funny, is because licorice contains flour, is not considered a candy. And same is with Kit Kat, Twix, and chocolate bars. So a lot of the taxability rules are just crazy, especially when it comes to food products. I mean, you can have like a bagel, you buy a bagel in one state, not taxable, but you get that bagel cut, now it's taxable. So again, that all is handled by the taxability rules to different products as you're selling across state lines in all jurisdictions.
That just makes it even more crazy, Tara.
It is. I mean, there's no reasons why. You got to think like, who came up with this and why did we come up with it? But it's just crazy. And then how it's like handled from one state to the other. I remember when I went to New York and I bought a pair of shoes, and because it was over $110, determined if it was taxable or if it wasn't taxable.
Yeah. And how as an accounting person or a business owner is anybody supposed to know this, which is why Avalara has this business. I mean, we know that it's really awful for you guys, and Tara's been doing this for 9 years, and I'm sure people stump her on a daily basis. I've been doing this for 9 years, and I don't know half as much as Tara does because it changes every month. Everything changes. There's tens of thousands of changes a year. I don't know how many slides you have left, Tara, but we got 12 minutes. So I was wondering if you could check out how many slides you have left, and then maybe we could open up some Q&A. We haven't had many things come across the chat. I don't know if people are being shy, but tell us what you got.
Yeah, I think that's it for the slides. So I'm done with the slideshow. But yeah, if you want to hit me with those questions and get those answered for you.
Yeah, this is Jennifer again. I don't have any questions, but I just want to let the audience know, don't be shy. If you have questions, no question is too simple or too complex. We'd love to hear it from you. So send those on over. And one just came in, let's see. Are there industries that are taxed differently based on their industry? Like, for example, the candy bars. So maybe they're asking, like, would construction be taxed for one thing differently than IT, maybe?
Yeah. So that's all handled by tax codes. So industries, I mean, you could be in the software industry, you could be in the manufacturing, distribution, medical industry, retail. All those are handled differently, but they're all handled by taxability rules. and tax codes that we supply our clients.
Perfect, thank you. And I'm going to put Jamie's email address in the chat, and we'll put that in our follow-up email as well with the recording of this. So if something comes to you, audience members, maybe after you sign off or you kind of start talking about this with coworkers, definitely feel free to reach out to Jamie, and she'll make sure to get back to you and see, you know, do we need to dig into this? Maybe we can have a conversation on the phone and kind of talk through some of these things.
Yeah. Perfect.
Absolutely. I will hook you up with Tara for a very informational session. There's no smoke and mirrors with sales tax compliance, people. You either need it or you don't. And it's, again, great to get you or your client on the phone with Tara for 30 minutes just to kind of weed out what you're doing and what would be more efficient, what you're not doing, more importantly.
Yeah, and I'd be happy to have a conversation, learn more about companies, businesses, their go-to-market model, see what challenges and faces they're facing, if there's any gaps to their compliance. I mean, I would just want to provide you with the information and the solutions to see if it's a fit. There's ways to go about this. I mean, it's not like $1 million solution, so it is feasible for companies where they do see the ROI to automate versus doing this manually and what it's costing them. So it is a great time to evaluate if this is something that is kind of in the back of the mind. Just also to add that we are at Avalara's fiscal year end in December, so magical things happen when companies do take a look at Avalara in December. So just keep that in mind. And then also for that free Nexus study, it's not costing you anything. If you feel like there could be gaps, I mean, what's it going to cost you not to do anything? So ask yourself that question. And if there's any questions that you have, if you want to email them to me, if you want to set up a call, more than happy to talk to you about the offerings that we provide.
And I think too, Tara and Jamie, from our customer base here at Out of the Box, you know, you've done webinars for us for as long as I've worked for this company and then probably beyond. And I know that it can be a lot of information listening to a webinar like this. It sounds like a huge undertaking, but every client of ours who has implemented Avalara does not regret it. Like they think, why did we not do this earlier? Like this was so much easier than I thought. This, you know, just saves so much time. Like you said, the ROI, it's incredible. So I definitely encourage people to maybe step out of your comfort zone if you're a little worried. Maybe you just feel like your laundry list is already so long. This might be one more thing, but really it will be so, so beneficial.
Yeah,
That's true.
Yeah, I would agree.
All right.
And then just to add to that too, Jennifer, I mean, is with our clients and our customers, I mean, we have a 98% renewal retention rate. So companies that do automate, and I believe we have over 30,000 companies that are using Avalara. So small startup, mom and pop shop companies to Fortune 500 companies. And a lot of times, like myself, I'll go online, I'll buy something. I know I'm getting Avalara that's doing that calculation for me because I see the little pop-up window, the address validation and that. So it's good to see like on the other end of it. So people on the call here, you may not be using Avalara for your business, but you are using it when you do buy something online or you go into a store, a POS system that they're using. I mean, Amazon. Everybody's purchased something on Amazon.
Yeah, absolutely. Well, I don't see any more questions coming in. Again, I will share out your contact information so that the audience can reach out directly. Maybe not in such a overwhelming setting, possibly as a live webinar to have their question read out. But I would encourage everyone to follow up and just really have that chat and see like how this could work for your business. So.
Yes, thank you. And I know that was a lot of information that I gave everyone, but do not feel overwhelmed. Just the one takeaway again, and I know I've said it many times during this presentation, but Nexus, that's the most important takeaway from this conversation. So I would love to have the opportunity to learn more about businesses. We'll dumb it down. We won't give a lot of, we'll learn more about your business, what your business is needing, drill it into that way, and then really give you the understanding and paint the picture.
And I'm just going to piggyback on that for all the 20 of you that are still on. Please don't call Avalara. Please don't have your clients call Avalara. We are, Tara and Rebecca and I are the concierge contacts for Out of the Box. We are the end of the road for you with 5,000 to 6,000 employees. We really are truly the end of the road. I've actually worked with the owners at Out of the Box for 10 years now, and so has Rebecca actually. So make sure to look for that follow-up email and then follow up with me and Tara directly, because we don't want you going to a call center in another country and talking to 5 more people before you get to us.
No, this is VIP treatment.
This is a VIP.
Yes,
absolutely.
VIP.
Absolutely. And Jamie, I just put your email address in the chat for everyone right now, so they don't have to wait for our email with that information. So go ahead and reach out. And ladies, if you don't have anything else, I'm just going to take things back and close us out for the afternoon.
Thank you.
Thank you so much.
Thanks, Tara.
Of course.
Thanks, Jen. Bye, everybody.
Absolutely. Thank you, ladies, so much. Thank you to everyone who joined us today. We have one more Technology Tuesday for the year, and it's the year-end checklist that you need. And we might just add Avalara consultation to that checklist.
Let's do it.
So we would love to have you join us after the Thanksgiving holiday. Information on how to register for that will be coming in an email as well. And then stay tuned for our 2023 webinar schedule. We hope you can join us next year. We have a lot of exciting things in the lineup. So thank you all again for joining us. Thanks to Avalara. We appreciate you presenting this information today, and we hope to see you all again soon.
Thank you.